Hey Swing Trading family, this is Super Swing Trader. I hope you are doing well. Today we're going to take a look at some charts and see where we can identify supply and demand zones and trade it for income. Before I do, if you're new to this channel, here I talk about swing trading using the rules of supply and demand and technical analysis to trade with the big banks, hedge fund managers, and professional traders, and not against them. If that's something you're interested in, please make sure to hit the subscribe button and turn on the bell notification so you can be notified whenever I release a new video. Also, drop a comment below. Let me know, have you guys placed any trades and have you made any money with swing trading using supply and demand yet? Comment below yes if you have and no if you haven't. I really appreciate your comments because it helps me tailor my content to best serve you. Apart from that, let's get right to evaluating the charts. Okay, today we're going to analyze the euro dollar versus the South African rand. On the left here, this is a daily chart. Every candle is 1 day. On the bottom right hand corner here, every candle is 1 week. And on the upper right hand corner here, every candle is 1 month. Let's do a top down analysis first. We see that, just looking back here, 2016, it rallied and then it dropped, and then it found this demand zone down here, and it rallied, and then it hit a larger time frame supply zone and it dropped again. But then, so then this is a area of demand right here, price drop, and then this up here is a level of supply. It's not very strong, but it's holding price down, so price is not able to go above it either. So that's what we have here. But with the longer time frames like the monthly and 3-month charts, we have to respect it because those are very long time frames. That's millions of lots traded, so we know that it's really strong, so we have to respect that. So we have demand down here and supply up here. So when price goes up here, we short, and then when price comes down here, we buy. But this level has been tested once already, so we want to just wait because price is also, it made 2 bearish candles and then it increased, and then now it's just consolidating here. On the weekly chart, we see that there's a demand zone created down here. And there's a supply zone up here. So price never retraced to this demand zone. So if price wants to retrace down here, we could think about going long. But right now, price is just hovering in this range. It's just hovering in this range here. And I believe this is supply as well. This is a lower time frame supply zone that's in control. So that's why it's ranging like this. So if price drops down here, I am very interested in going long. But if we want, we cannot go long right here because supply zone is in control, and for all the breakout traders and momentum traders, this is the trap that we see so often with day trading. On the daily chart on the left here, we can see that price is in a uptrend. And as it increases, it's been making new demand zones on its way up. Because this is a supply zone that's been broken. But then we can see that this is an example that it's very important to look at higher time frames other than just the daily, because we can see that, oh yeah, this broke supply zone, this daily supply zone, but it's in a bigger uptrend supply zone, so we kind of don't want to go long here either, because it's like I pointed out earlier on the weekly chart that price is in a supply zone, so we don't want to buy. So even though this is a level of demand zone, it's so high in this weekly range already that we don't want to buy, because this higher time frame supply zone is much stronger than our lower time frame demand zone. So price could work, but price is more likely to break this zone and come back down here, and probably even break it if there's enough sellers. Otherwise, it could break out of this weekly supply zone. But based on these candlestick patterns and price action, we see that there are two long bearish wicks that's forming. So we see that when we see this, we can tell that price is losing steam. And the way I can tell that also is if I remove this, whenever it has a big wick like this, it drops. Whenever it has these wicks, it drops. So we can see that we can kind of predict that this is what's going to happen again with this Forex pair. And that's all I have for this Forex pair analysis. I hope this helps you in your trading journey. Thank you very much for watching this video. Please remember to give it a thumbs up if you enjoyed it. Leave a comment below. I'd love to hear from you. And if you're not already subscribed, please click the subscribe button and also click that little bell icon. Then that way you'll get notified of the next video that I publish. Thanks again for watching.